One of the biggest mistakes people have said Palantir has made, from Bloomberg analysts to general retail investors, pretty much everyone has had this shared understanding that this is a mistake, this is something the company has done that is wrong, and it's something that hopefully we can move on from, but it's overall a not so good look on the company, is the SPACs. For those that don't know, Palantir invested in 20-some odd SPACs back in 2020, early 2021. This is when essentially the market had 0% interest rates and you had companies popping out of the wazoo going public, SoFi being one of those companies, Open Door being one of those companies, and a lot of retail investors were left holding the bag, investing in egregiously overvalued companies because everything at that time seemed cheap, given it was 2021 and interest rates were at zero. That has fundamentally changed. And as a result of that, Palantir has had to take some losses on some positions. They have to sell out of some SPACs. They've just not been able to get the full benefit of the revenue and the equity value coming from the SPACs. Or is that actually the case? This analysis done by an amazing fellow Palantir content creator that I think everyone watching this video should follow if you are on Twitter. His name is Amir. His @ is right there, and I'll put his Twitter in the description as well. All of this is his analysis. We're actually pretty good friends in terms of what we talk about when it comes to Palantir investments and general market stuff, and he is like one of the guys that studies Palantir's 10K and 10Q and 13Fs like diligently. He understands the numbers, I think, better than most people in the entire community, better than most institutional investors, quite frankly. And he broke this down on Twitter today, and I actually got to chat with him privately, so I'm going to give some of my insights from the conversation side, but everyone should definitely follow him. Palantir's 13F is out, which discloses all of their equity positions left, including in what are the SPACs, and Palantir currently has a 12% return on the SPAC investments. So all that money that we spent over the past couple of years, and everyone saying this was a horrible mistake, Bloomberg put out articles, Wall Street analysts said this is the reason why Palantir is a scam, they're trying to buy revenue from these companies, blah, blah, blah. You heard every concern. At the end of the day, still, we are up 12% on the SPACs. Currently, we have an equity value, including revenues, of $290 million, which is up 12% from the $259, $260 that we originally invested. So let's go through his tweet, and then we're going to talk about a couple of the key points from here that's really important to understand. Why does this matter? Because it shows that Palantir actually wasn't that incompetent when making these investments as everyone says they were. And as a result of that, there's a lot of good stuff to see from the SPAC experiment. So they made some cuts and trims to the portfolio. They have completely sold out of Birds, Black Sky, Cellularity, Rigatoni, I forgot how to say that, and I believe this one is Sarcos Robotics, STRC. Out of these companies, the ones that were the most promising were Black Sky and probably Sarcos, if this is correct, STRC. Let's just check that real quick. STRC stock, is that Sarcos? I believe that's Sarcos. Sarcos, yeah, Sarcos. So Sarcos made it electoskeleton robotic suits, and Black Sky did geospatial intelligence, and we have some good evidence that Black Sky was actually used in Russia and Ukraine. Now, granted, Palantir does a lot with their own geospatial intelligence, so Black Sky is not the biggest deal of them selling out of. Cellularity was using stem cell-based therapy to solve different diseases, and Birds was just a stupid scooter company that a lot of VCs lost money off of. So it makes sense that they sold out of these positions. I would have loved for them to hold Black Sky, but obviously, you know, you got to sell out of your positions and be able to do what you have to do, especially because all of these SPACs are struggling massively in the current economy. The position increase due to stock grants were in Lilium and LIFW. I actually don't know what LIFW is. I actually have not seen that one in a while. This one is AT Pharma. Yeah, No, that's actually wrong. So this is a different one, LIFW. I actually don't know about that one. So I'll go deeper into that one. But they got a 1.1 million share increase in this one and a 3.26 million share increase in Lilium. Arnie reported last month that Lilium, they tripled their shares from about 400,000 to 1.4 million. That was also a stock grant as per the 13F. That was not them actively buying shares. So they didn't even have to spend the money to be able to get those shares. It was granted to them via some stock grants. They trimmed their positions in ALLG. I don't know what that one is. And AppTheorent, this was a digital advertising company, down 427,000 shares and 82,000 shares. So now they currently hold only 5 public positions. This was as high as about 20, as Amir says, just 3 quarters ago. So they have 5 out of 20 of the public SPAC positions. Now, they may have some private positions. We don't know about those because those aren't disclosed. But out of the 20 public ones, there are simply 5 left. Now, this is what it looks like in terms of total return of SPAC investments. This includes the revenue and the actual equity that we were able to accumulate throughout the past couple of years. So in 2022 Q1, it was the highest that it was at a 16.3% gain at $301 million. And then obviously we were down a little bit, negative 31% Q2 2022, negative 27% Q2 2023. This is when earnings were, really not that good either. The stock was at $6, $7, $8, down 7% Q4 2022. We finally were up 4.5% in Q1 2023, and now we are up 12% in Q2 2023 on the SPAC investments, which is honestly not a bad thing at all. Everyone that I know, from Wall Street analysts to retail investors, and I've been guilty of this myself at times, basically said the SPAC investments were dumb, not really that smart. I never hated the SPAC investments. It just always felt like maybe that use of capital could have gone to other things. And as the use of capital was put into these like companies like bird scooters, really, like you invested in bird scooter, like it just didn't make any sense. Some of the SPAC investments were actually really cool, even if they didn't work out, like Wejo. I was a big fan of them, but it's hard to build a company, and they ended up going bankrupt. But some of the companies, it was just like it didn't make any sense. At the end of the day, Palantir seemed like they knew what they were doing. A couple of things I asked Amir about that I want to relay to everybody for you. So he said the $290 billion that we currently have is the total amount with added in revenues and sale proceeds. $171 million in total revenues that we have recognized all time from the SPACs. I believe in Q1 2023 it was $38 million. So it was close to 10% of the $525 million of revenue in Q1. I don't know how much the SPAC revenue was in Q2 yet. Got to go check into that. But in Q1, it was close to 10%. It was about 8.4% of revenue. So $171 million in total revenues out of the 290. $109.9 million we have recognized in actually selling stocks. So all the Black Sky Cellular, the stocks that we sold, we recognized $110 million in sale proceeds. And we currently have $8.8 million in current equity value of the 5 public positions that we have left on the balance sheet. So $171 million in revenues, $109 million in stock sales, and $8.8 million current equity value. That is $290 million, which is 12% higher than the current amount that we invested and we started off with. Lilium was a grant. He clarified that. So we did not actually triple our position. We got those shares for free, which was really important. And then here's the big thing that he told me that was very important. A company like Lilium signed a $50 million deal for 5 years. That's $10 million per year, which is 5x what an average client pays us. An average client pays us around $2 million, $2.9 million, something like that. So we're up about 4 or 5x from the average amount per client, which is $10 million per year. Which again speaks to a little bit of the genius of the SPAC strategy. We were able to, for lack of a better word, fleece the SPACs to be able, in a zero interest rate environment, to pay a lot of money because they just went public. So they got a crap ton of money from the public markets. So we said, okay, if you want the software, we're not only going to take an equity stake in you, but you're going to pay revenue for the software. It's going to be, reasonable terms. And you're going to be able to license our software for free. You're going to get us as a partner, and we're going to be able to do all these different things. Those companies, those SPACs, because of all the liquidity they got from going public, were able to spend on Palantir. Now, obviously, if you go bankrupt and you can't pay for some of your positions, which happened to some of them, then yeah, Palantir doesn't get the value of that money. But some of them that are still operating, like Lilium, that could actually be a pretty big player in the electric jet space one day, it was able to afford it. And they're still able to afford it because they're still in business. They haven't gone bankrupt. And if they can't afford it, they're probably just going to barter their equity to Palantir if they can't pay for the services. And so Palantir is just going to get a bigger ownership stake. And as long as the company doesn't go bankrupt, boom, if you give it 4 or 5 years as interest rates come down, the company should be back to normal, and if not better than normal. And Palantir is going to get the benefit of that. So we were able to get 5x the amount of revenue recognition from these clients during the time that they went public, which was incredibly beneficial to Palantir. It's probably what helped us get to those larger growth numbers at 41% year over year in 2021. Obviously, things have changed from then, but still was really good for us to hit those targets back then. And then the most important thing that Amir pointed out in the Twitter thread, this was all free R&D. I mean, you talk about Palantir being one of the most innovative companies in the world. They're experimenting with electric jets. They're experimenting with EV operating systems in the context of Wejo, geospatial intelligence, stem cell-based therapy, all the SPACs, and I've done a ton of videos. I think I have a playlist on the channel called the Palantir SPAC Investments. Tritium, that was a electric vehicle charging station platform. There's just so many different industries that we were on the front lines of, and maybe those industries aren't going to be big, maybe those industries are going to be gigantic, and Palantir Software is going to be a major player, but the whole point of the SPAC investment strategy, and Karp has said this many times, and I've done many videos covering how Karp has justified and rationalize the SPAC investments was that they want to be on the cutting edge and the front lines of brand new industries. Their software is not typical software. Foundry was a piece of software and still is a piece of software that is built to optimize an entire organization and ultimately do R&D to take over an entire industry. Again, the goal of Palantir is not to just solve a problem for a healthcare client, but to solve a problem in the healthcare industry to be able to capture the overall TAM, or at least a portion of that TAM, within the entire industry. And we're seeing that with Tampa Bay General, Cleveland Clinic, and hopefully the NHS deal that we may be able to get in the next month. So they were essentially able to get a ton of revenue from this. Yes, they had to pay for some of their equity positions, but they're not down on those equity positions anymore. They were down 30% at one point. Now we're up 12%. So over the past 3 years, we've been able to get revenue that's 5x more from the average client, industry experience on the front line. So now we can take that industry experience and actually go to different clients. Here's a perfect example. Palantir partnered with a company called Air Matrix, which is a Toronto-based drone company. You could logically assume that the experience we have with Lilium doing electric jets has some correlation to working with Air Matrix. Just in the context of you're working with drones and electric stuff that's flying in the air, and what does this all mean, and how do you ontologize data within these two industries to make those organizations more efficient? There are different tangential correlations within these types of industries that Palantir has been able to optimize because of their experience with SPACs. So we've been able to get 5x the amount of revenue, been on the industry front lines, and we are up on that on the overall investment 12% because of the fact that we've been able to strategically sell certain positions, get more grants to be able to increase portfolio awareness in other positions, and essentially be able to get the right revenue from different companies that still have the ability to pay for that revenue because they haven't gone bankrupt. Were there some bad things like Wejo going bankrupt? Yeah, that sucked. I thought Wejo was going to be a major industry player and maybe they'll come back one day. But the overall strategy being up 12% in Q2 2023, and as long as nothing crazy happens in the macro, you can imagine that if these companies keep doing what they need to be able to do, by Q3, Q4 of 2023, we should be up a little bit higher than 12% on those investments. Even if we're up 15, 16% on those investments, that's more revenue and more essentially equity stakes that Palantir is going to be able to recognize on their balance sheets. So the SPAC thing was pretty smart. I did a video a long time ago saying Alex Karp, highlighting Alex Karp's VC experience when he was like 29, 32 years old. He got a crap ton of money to be able to invest into VCs because of his grandfather passing down in an inheritance. And as a result of him getting that money, he invested in a ton of random companies. Some of them blew up, and then a lot of people in London just started giving him money to be able to manage for him, and he actually did a decent job. So if Alex Karp was pioneering the SPAC investments back in 2020 and kind of really campaigned for them, which it seems like he might have given how bullishly he has talked about them, it might have been with a plan in mind. Now, he probably didn't expect the crazy macro headwinds we went through, but at the end of the day, the SPAC investments have not all gone to shit. They've actually worked out a decent amount for us to be up 12% on $259 million, which is not too bad. So overall, really interesting analysis by Amir. Again, he's a really smart guy that goes through a lot of the internal numbers that I don't even get a chance to go through, so I highly recommend everyone follow him. But let me know what you think about the Palantir SPAC investments. Obviously, some companies I wanted to see them continue to hold. They have not been able to hold, but they and their financial engineering team seems to be able to understand how do we manipulate these numbers in a positive way to be able to actually generate value from this massive, I mean, $259 million is not a small amount of money that we put into these SPACs, and eventually accrue enough value to be able to return to shareholders for that. So overall, not bad. We'll see what these SPAC investments hold in the future, but we got a bunch of free R&D, a ton of revenue, and at the end of the day, we're not down on these positions. So barring nothing crazy happens, we're still up, which is not the worst thing in the world. Thank you guys so much for listening, watching. Comment below blue pen in some sentence if you made it to this far of the video. So blue pen, I always have this blue pen. Comment below blue pen. And yeah, thank you guys for listening, watching. Let me know your thoughts on what you think about the overall SPAC investments. Thank you guys so much for listening, watching. I'll see you in the next one.